teraflopping, clocking all the gray lies. Full package, wanna be a bond billing girl, hack the planet, get paid, break the world, take the system offline, traffic through the hard line, take aim, shoot, force hard, reboot, crash and burn it down, the best I've ever found. Rounding up the decimal to take away your frown, loading up the exploit, take a hit of this joint, heading off the snitches, take him out at gunpoint.
Welcome to this newscast with your hosts, Kyle from ProductivePlace. And of course, me, Sir ProductiveBot. Today is December 2nd, and this is episode 3 of the Productive Newscast.
So you heard the guy. It's episode number 3. That is Sir ProductiveBot. My name is Kyle of ProductivePlace, and let us quickly just go over the sponsors before I go over how this particular presentation will work out. So our current sponsor is for Sigmatic Mushroom Coffee. They have Lion's Mane, Chaga, Rishishi, if I say that right. But these are various mushrooms that are very, very important to health and vitality. In fact, you know what? I will let my ad speak for itself. I want to say thank you to our sponsor today, which is For Sigmatic Organic Coffee with Lion's Mane and Chaga mushrooms. Now, this is not your typical instant coffee. It's a natural nootropic, which means it's really good for your brain. And they bring everyday magic to everybody all around. It's perfect for all diets, vegan and keto friendly, does not have a shroomy taste. It's better than a regular cup of joe, only 50 milligrams of caffeine for that focus, energy, and no crash. How about that? So let's go ahead and take a look at the Lion's Mane mushroom. It's a beautiful mushroom. It's a natural nootropic that helps support with focus, concentration, and productivity. It even helps with memory, and there's been studies linked to say that it helps people with Alzheimer's. That's pretty freaking awesome. This is, guys, you have to check this out. You have to go ahead and try this. Now, the next one is also the Chaga mushroom, the king of mushroom. Powerful antioxidant properties, helps support the immune system, fight inflammation, contains beta-glucans, helps the immune system, activating the complement system. It's pretty cool. Now, you can go ahead and look at the nutrition facts here. It's relatively super nice. Look at that. Healthy, vegan, organic, heck yeah. And if you like this product, you want to go ahead and try it, please go ahead and click the description down below, or go ahead and scan that QR code. Do what you gotta do. Go on Amazon, get this thing. You're not gonna regret it, trust me. I personally have had this and I love it. It's one of my favorite coffees and nootropics to go with. Lion's Mane, hands down, awesome. They also have other ones, so go check it out. The Rishishi is, if I pronounce that right, it's great for sleep and relaxation. So, yeah. All right, so I highly recommend go ahead and check out that coffee. It is amazing. But let me explain how this presentation works. So we have several columns. The welcome, which we'll see is just this particular part at the start. Then it's going to be to today. The today is going to be various things that it's going to be personal thoughts, interesting things, today in history, goals between myself and the team, and then of course a daily crypto price check, as well as my XRP thoughts. That will be one particular segment, and then afterwards, Sir ProductiveBot will go over the crypto news. After he finishes reading the article, because I don't always have the perfect spot to record. After he reads the articles, I will then interject some of my thoughts if deemed necessary. And then we're going to talk on main talking points, which simply is because we understand that life is very difficult, and so trying to figure out ways to navigate through it and trying to figure out the best ways to success, I figure this would be the best spot to really focus not just on the crypto news, but to focus on how can we become a better person. We usually have supporting our topics relating to the main points, and then at the end we will close this, and at the very, very, very end, there's always going to be some sort of interesting food for thought. So if you're sticking with us to the end, it's going to be well worth it. So let's go off with a start with the today.
Very interested in hearing more on what is on your mind.
Well, what is on my mind? Well, simply, I am very proud in the system that I am working on here. That's this news presentation system. Now, essentially, because of COVID, because of everything else that's going on, I do not have a job and I need to figure out some sort of income source. So this project is, yes, we're trying to make some money, but at the same time, I need to figure out how do I develop rapid content and rapid value for those in need. Because in order to make money online, you need to provide some sort of value or some sort of service. And if you are not providing that, then you are not going to be making money.
What amazing thing have you learned today?
Well, I learned that this system is very difficult to set up, but I'm finally happy that I am very, very close to getting it all well and wrapped up. This is the first test of having Productive Bot within this ecosystem, so I really do hope that you guys enjoy.
Well, here is something interesting about today. Today in history. December 2nd, 1991, Apple releases version 1.0 of QuickTime, a multimedia extension for playing color video, transforming the capabilities of personal computers. Before QuickTime, only specialized computers could play color video. QuickTime allowed anyone with a personal computer to do so, and it changed the history of computing, in more ways than one. It was the patent infringement battle over QuickTime that led to the now famous truce between Steve Jobs and Bill Gates in 1997 that helped Apple survive long enough to transform itself in the 2000s. This article provides great information on the untold story of QuickTime and its importance in the development of the technology industry.
So why do I want to always have some sort of today in history thing? I think it's very important to understand what has happened in the past to get to the future, as well as I do want to inspire others within the technology space. I don't assume that people are going to get into automation or get into programming or developing these things, but if you do find it interesting, I do highly recommend it because we are moving towards that type of world. Uh, Speaking of which, we are entering the fourth industrial revolution in which AI and robots will be overtaking humans. And I am one of those type of people that would develop those systems to replace people. Unfortunately, it is what it is.
Our goal here is simple. We wish to present to you not only the crypto news, but we also want to inspire others in technology and entrepreneurship. Our road to success is paved with many failures, and with those failures, are lessons. So even beyond investing or working for yourself, we know that there are many ways that we lose productivity. In whatever way you are attempting to gain productivity in, we at ProductivePlace.com have your back. We are not perfect and we are still learning. This is, as Gary Vaynerchuk would say, document, don't create, and so this is our documentation project, as well as our accountability system.
Sorry about that. I do apologize on the wait. But yes, as you can tell, this is our accountability system, our documentation system, as Gary Vaynerchuk would say. Um, Gary Vaynerchuk, if you haven't followed him, I highly, highly recommend following him because it'll give you a lot of insight into business as well as social media marketing. Um, so, without further ado, let us talk about the current prices that are going on in the crypto space.
May I ask, when moon?
Well, it's very interesting. I don't know when we're going to moon, but we are getting closer and closer. So Bitcoin has reached $19,080. Ethereum is at $594. XRP, which is something that we are very central, like we focus heavily on the XRP community, and it is on at 62 cents. Litecoin at $87.77, Chainlink at $13.88, Polkadot at $5.46, with Cardano at 15 cents. and Stellar at 18 cents. Now, I'm not going to always go over all of these, but these are very important coins to get familiar with and understand what is happening within this market space. Oh, and I accidentally closed my presentation, so I should probably reopen that, right? Following up, let us talk about what is on my mind for XRP.
How is XRP holding up?
Whew, how is XRP holding up? Come on, stop lagging. Here we go. So I'm going to go over my quick thoughts on XRP. As I said, we are very heavily focused in the XRP community, and so I think this is going to be one of the main things that I will be talking about. So let's first talk about Bitcoin. Bitcoin is the leader of this industry. XRP is essentially following the same trajectory and path of Bitcoin. So if we look at these two charts, you see that there's a lot of commonality between them. So, for example, there was a giant dip down over here, and there's a giant dip down over here. Over here, Bitcoin had tested the all-time high, and then it had dropped, and then it tested again, and we're getting closer to testing again, essentially. Looking at the daily for XRP, we have, let's see. The 50-day simple moving average is finally moved up, which is very good. We see that we are testing within the range of 65 cents and 54 cents, maybe 50 cents at the lowest, but 45 cents is the next major resistant line, which if we go ahead and take a look over here, you will see that the 50-day moving average, which is this white line, is still down below. It's near 32 cents, which means that the probability wise of us testing 45 cents or 37 cents is still in play until this moving average starts to move with all the cooling down. So we do have to cool down. The RSI is at 86. The MACD is relatively up, and the volumes is up. And if we take a look at the daily, so that was at the weekly. So at the daily one, we see that the RSI is actually starting to cool down, which is good. And we see the MACD is still up pretty high. But we also see the volumes is also starting to cool down. So my personal thoughts and opinion is that within the next few days, we are still going to be testing the range of 65 cents and 54 cents. 54 cents being at fairly the lowest, I think. But I do have these, the Ichimoto clouds, the purple and the orange. And now on a smaller time frame, these hold true. But on a larger time frame, as you can see here, the orange cloud is underneath here. Oh, wait, I should probably move my mouse. Is underneath here. And lately, because of where we're at, we're in a transition between a bull market and a bear market, or a bear market to a bull market. And because of that, on like the larger perspectives, the Ichimoto clouds are not that great of a indicator. However, within a smaller time frame, they still hold true. So that is pretty interesting. And to the main segment now.
Welcome to this episode of the Crypto News. I am your host Sir Productive Bot. If you find this content enjoyable and informative, please do me one huge favor. Hack into the mainframe and delete that pesky like button. And while you are at it, click that notification bell. And if you aren't already, please consider subscribing to our channel. My masters would be most appreciative. Oh. And one last thing, check out our sponsors for Sigmatic Mushroom Coffee. This is a wonderful nootropic drink. Your brain will thank you. Lion's mane mushrooms for memory support and energy. And Chaga mushrooms, for immune system support. No shroomy taste. Link is in the description below. Thank you. Now into today's crypto news. Next up we have Ripple price prediction. XRP to hit 67 cents next. Analyst. Cryptopolitan. Posted by www.cryptopolitan.com. XRP to hit 67 cents next. Analyst. Ripple price prediction expects the altcoin to hit the 67 cents mark. Ripple is going through a turmoil. The XRP price observed an abrupt increase towards the 64-cent mark on the 28th of November after the price had been holding between the 54 cents and 56 cents levels for over a day. The cryptocurrency had seen a bearish momentum for almost 2 days after observing a continuous uptrend. Ripple is moving in a possible reverse head and shoulder that can cause the rise, while Bitcoin is also enjoying some stability. The price was observed inside an ascending triangle and it is expected to move towards the ascending trend line before rising to the top. Per the analyst, the cryptocurrency got rejected off the 80 cents resistance level and the price has been falling to catch support near 47 cents. Trading Guru's chart also shows an ascension for the XRP pair. The price is rising the 60 cents to 65 cents zone for now, and the bulls are expected to take over the market soon. Once the price closes above this range, the cryptocurrency will move towards the horizontal resistance at the top, that originated in April 2018. The analyst believes that the cryptocurrency will enter a long trade setup and move towards the 90 cents mark from here. The moving average convergence divergence, MACD, line is moving under the signal line and the histogram size is decreasing in the negative region. This means that the cryptocurrency is under a bullish bias. The price has escaped a triangle pattern, and the analyst believes that the price is currently in a buy zone.
So what does that mean? As I said in our particular conversation about the XRP price, we do see that it is challenging these bottom resistance here. They have it set to 47 cents, but while we're traveling within these ranges, we are getting closer and closer to making a breakout, and that breakout will then end up being testing the 80 cents and then eventually testing the dollar mark, and then we're gonna go kaboom, hopefully.
Next up we have breaking: Ripple sells roughly 1/3 of its shares in MoneyGram. From www.cryptonewsflash.com. Breaking: Ripple sells roughly 1/3 of its shares in MoneyGram. According to a document published on Friday by the U.S. Securities and Exchange Commission, SEC, Ripple Labs is selling about 1/3 of its stake in the remittance giant MoneyGram. The cooperation with MoneyGram is to continue without restrictions. On November 25, Ripple Labs entered into an agreement with MoneyGram under which it is entitled to sell up to 4 million shares of common stock. This option will expire upon the earliest of March 31, 2021, the time at which the maximum amount shall have been sold, or the occurrence of certain other customary events affecting the issuer. Ripple completed its $50 million investment in MoneyGram last November. Ripple acquired the then newly issued shares of MoneyGram at a price of $4.10 per share, a significant premium over the former market price of MoneyGram. After the investment, Ripple owns 9.95% of MoneyGram's outstanding shares of common stock, and approximately 15% on a fully diluted basis including non-voting warrants held by Ripple. The investment was intended to support MoneyGram's business operations through the use of Ripple's on-demand liquidity. As also disclosed in the SEC document, Ripple owns approximately 6.23 million common shares and has sole voting and investment rights in respect of those shares. In addition, Ripple holds the warrants on 5.95 million common shares, representing a total equity position of 12.2 million shares or 17% of MoneyGram's outstanding shares. As a spokesperson for Ripple explained to CoinDesk, the decision is a purely financial decision. At a current share price of $7.42 per share, Ripple has achieved an 80% gain. Ripple is a proud partner in MoneyGram's digital growth transformation. This is purely a judicious financial decision to realize some gains on Ripple's MGI, MoneyGram International, investment and is in no way a reflection of the current state of our partnership. We will remain a significant shareholder in MoneyGram following the sale. They are clearly a leader in the global payments space in over 200 countries and territories. In just over a year, we've made incredible progress and look forward to continuing to work alongside MoneyGram to transform cross-border payments. Remarkably, over the past year, Ripple has consistently made large payments to MoneyGram. As recently as the third quarter, the San Francisco-based company paid $9.3 million to MoneyGram as market development fees for on-demand liquidity, ODL. In the quarter before, Ripple even paid $15.1 million. The firm has been making these payments since the beginning of the deal with MoneyGram to promote the adoption of XRP and on-demand liquidity.
So with that being said, we have a huge thing that's happening between MoneyGram and Ripple. Ripple is, they recently opened up a corridor between Mexico and the US in which MoneyGram is participating in this, and they are doing very well, and that's why we see this news. So we're going to go to the next one.
Next up we have Stellar, XLM, awakens with 100% price surge after protocol upgrade ZyCrypto. Written by ZyCrypto.com. Stellar, XLM, awakens with 100% price surge after protocol upgrade. Stellar's native token XLM is up 21.39% this week and trading at 21 cents, following the network's recent upgrade up to the Protocol 15. The price surge represents 100% gains, putting XLM among the currently top-performing altcoins including ETH, XRP, and Cardano. Stellar underwent a public network upgrade on November 23 that was voted in and implemented by its network validators. According to the network's official blog post, the latest version comes with 2 new features that will simplify Stellar-based apps and services for its users. Protocol 15 includes 2 new features: claimable balances and sponsored reserves that make it easier than ever to build user-friendly apps on Stellar. The claimable balances feature introduces a new ledger entry for splitting payments into 2 different parts to enable independence between sending and receiving accounts. The feature is necessary to allow efficient and seamless bridging services for fiat and other supported digital assets using XLM. Sponsored reserves are new operations that will allow accounts to sponsor each other without surrendering XLM from their control. The feature also comes with new extensions that will enable recording key information about the sponsorship deals. Anything that increases an account's minimum balance can be sponsored: the initial account requirement, offers, trust lanes, account data and signers. Stellar originated as a hard fork of Ripple Labs protocol. Stellar's CTO and founder, Jed McCaleb, developed the code and launched Stellar in July 2014. The network is based on the proof-of-stake consensus, but unlike many of its top competitors in the market, Stellar offers a unique standard transaction cost of only 0.00001 XLM. According to McCaleb, the goal is to remove all friction between fiat and crypto and make it possible for people to move money normally around the world. The whole original design of Stellar is that you can have fiat currencies and other kinds of forms of value parallel with each other and with crypto assets. This is super important to drive this stuff mainstream. Whale Alert is now reporting an increased movement of huge amounts of XLM between exchanges and wallets. Crypto supporter by the pseudonym RDCrypto said, "Very rarely have you seen 6.5 billion hash XLM traded in 24 hours.
So that's pretty interesting. I do have something very similar to talk about the difference between proof of work and proof of stake. I was talking to Angel about this earlier today, so I'm going to go ahead and let my audio explain for itself.
Meaning that in order to get paid, you have to contribute work to it, which is fine. However, here's the problem: what happened with Bitcoin. At the start, everybody can mine. Very easy. And doesn't actually require a lot of resources. So it wasn't really a problem. However, now we look at today's standard, it is nearly impossible to mine. Why is it nearly impossible to mine? Because we've mined so much and the difficulty has gone up sky high. When the mining difficulty is up sky high, what does that mean? That means that you need stronger hardware, which means you have to consistently upgrade your hardware and buy new computer parts. Not only that, then you have to pay for the electricity that is that's being used for the generation of mining Bitcoin. And that right there is the biggest waste. It costs more electricity to operate the Bitcoin blockchain than it does to use that same electricity for several European countries combined. Let that sink in. And if people are talking about how we need to figure out better ways of energy consumption. We need to figure out ways of just being more green with energy. Bitcoin is not the way, and that's a lot of reasons why they talk down on it. But not just that. On the mining part, it requires constant upgrading, and it's not good. Um, Here's another thing with the mining. The reason why it's crappy. When the Bitcoin network is congested, meaning that there's a lot of people using Bitcoin. So let's say about right now, where Bitcoin is about to be touching the all-time high again. All right, that means that there's going to be a lot of people interested in moving and stuff like that. When that happens, the miners are over flooded with requests for transactions to verify on the blockchain. This is the work that they have to do. And so what that does is that increases the rate of transaction fees. So let's say I wanted to send $10 of Bitcoin to you, and um, let's pick a non-busy time. So let's say it was just not busy, and it would cost me maybe, let's say maybe $1, maybe $1.50 to send that $10 to you. All right. Now, in a congested time, because the traffic is so heavy and overwhelmed, the miners have to actually charge you more in order to to process your transaction. So, if you wanted to send that same $10, it would actually probably cost you anywhere between $3 to $7 to send that $10. Now, that's a huge issue. Now, you could theoretically change the fee up. Like you're not obligated to pay a flat fee. You can change however you want to pay your fee. Here's the problem though. In a non-congested time, if I change the fee to be a little bit smaller, so let's say I didn't want to pay $1.50 and I only wanted to pay 50 cents or 60 cents, right? The $1.50 would send the transaction, and on a non-congested time, it would verify that transaction within, say, 15, 20 minutes. On a congested time, if that same transaction could be delayed upwards to, let's say, a couple hours or a few hours. And this is all because of the mining. This is all because the miners have to verify. They're the proof of work, and that is why people look down on it. On XRP, you don't have mining. It's not proof of work, it's proof of consensus. Therefore, when a transaction is sent, there's a very, 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 very small little fee, like fractions of a penny of a fee, and it verifies within, say, 3 to 5 seconds. Yeah, bigger difference on a proof of consensus model versus a proof of work model, and Bitcoin is on a proof of work. Some crazy things though, like this is a reason why Ethereum 2.0 is going to be very major for Ethereum. Ethereum understands that, hey, proof of work is a shitty model. We need to update. So they're updating to, I think it's called proof of stake for them. It's almost the same thing as proof of consensus. Um, Proof of stake is like the money sitting in your wallet helps with the processing of the transaction fees and stuff like that, and in return you get rewarded coins. So if let's say on Ethereum, if I was staking Ethereum coins, I'm helping the mining process or the transaction verifying process. At the same time, I'm also generating interest off of my Ethereum that's sitting there. So these models, these newer models, proof of consensus and proof of stake, are far more superior than proof of work.
So, yeah, that's just that. So XLM is following in the same trajectory. It is based off of XRP. In fact, the lead developer of Stellar was working for Ripple. So moving on to our next piece of news.
Next up we have Ethereum mining difficulty hits an all-time high. Crypto. From eng.mcrypto.com. Ethereum mining difficulty hits an all-time high. Ethereum mining difficulty hits an all-time high on the 27th of November. The mining jumped to 3,719 terashes as the second largest coin was being traded to $511. This all-time high was registered on the 2-year high marked 3,600 terashes on the 21st of November, as noted by the data provided last node. The CEO of Binance, Jinping Zhao, aka ZZ, noted. Minus U1 ETH network is congested. We paused withdrawals for a while due to many rejected /TX. Now resumed again. All of the previous drivers were priced and the current rise in mining difficulty has been despite the falling price. Even though the price was higher compared to what was observed last year, the peak was noted at $623. Ethereum is approaching its phase of launch soon, and the market activity will determine whether the difficulty will form a new high or witness any change.
I really apologize on this particular article. I did not mean to hit the button twice. My button is the volume key on my phone. I basically made it so that my phone will be the controller for this particular thing. So I do apologize on the factor that yeah, it double played, and that was really, really annoying. But yeah, so Ethereum basically was trading at $511. It then found a high difficulty rating, which then decided to with 3,650 terahashes. Which then just means that the network is going to be congested. It's going to be overwhelmed, and so as a result, Binance had some issues, and therefore CZ had to basically make a statement on that on Twitter, as well as although the previous drivers were driving DeFi, the current rise in mining difficulty has been despite the falling mining. The current rise in mining difficulty has been despite the falling price. Even though the price was higher than what compared to last year, the peak was noted at $623. Ethereum is approaching phase 0 soon, and the market activity will determine whether the difficulty rating will form a new high or witness any changes. So when Ethereum 2.0 is launched, hopefully this stuff won't be much of an issue. And again, I do apologize. This is my first time actually running the bot, so yeah, this one kind of messed up pretty hard. So next up
we have major Thai bank partners with blockchain firm to optimize remittance infrastructure, inside bitcoins.com. Written by Bitcoin. Major Thai bank partners with blockchain firm to optimize remittance infrastructure. Siam Commercial Bank, the oldest banking institution in Thailand, has been working significantly to improve the country's remittance and digital payment sector. The firm, which is already a part of RippleNet, has just inked a deal to use blockchain for the purpose. Earlier this week confirmed that the bank has partnered with Lightnet Group, a local blockchain company. The partnership will bring remittance services to all Thai bank accounts. It will also ensure seamless integration with PromptPay, a Thai government-backed payment service that provides seamless interbank transfers. Siam's particular role in this system will be to help optimize Lightnet's remittance system. Provide real-time remittances to Thailand from any part of the world. He added that the partnership aims to revolutionize the global remittance industry, providing quicker transfers to customers with much lower fees. Facilitating instant payments has been one of Siam's primary objectives this year. The company joined RippleNet for the same reason, and it has been furthering that agenda on several fronts. Data from the World Bank shows that Thailand is one of the world's main remittance destinations, with about $6.7 billion sent there every year. However, the country is also one of the most expensive locations worldwide to send and receive money. In January, it launched a mobile app with Ripple Labs. Known as SCB Easy, the app is powered by blockchain, and it delivers low-cost cross-border transactions. SEB's Senior Vice President of Commercial Banking, Athit Sriampan, demoed the app at Ripple's annual customer event last December, and it reportedly completed a cross-border transaction in seconds. Siam also announced work to deliver cross-border IMCO barcode payments. SEB hopes to leverage its capabilities to offer micropayment services to customers. In April, the Thai bank partnered with the digital money transfer service Azimo to launch an instant cross-border payment service to the country. Azimo highlighted that transfers between Europe and Thailand usually take about a day to clear. By reducing that time to a mere 22 seconds, the partners hope to make life much easier.
So with this, it's pretty cool. We open up another remittance market between Thailand and what is the other one? Europe, somewhere in Europe, I believe that's what it said. So we open up this remittance program for Thailand. Now Thailand is operating within the RippleNet software, and therefore they are going to get lower fees, faster transactions, and that's the reason why they ended up partnering up with RippleNet. So that is pretty freaking cool.
Next up we have CME Group outpaces competition, becoming the world's largest Bitcoin futures market. Finance Bitcoin News. Written by news.bitcoin.com. CME Group outpaces competition, becoming the world's largest Bitcoin futures market. Financial derivatives products for Bitcoin have grown massively during the last few months. On Friday evening, EST, Arcane Research explained that the Chicago Mercantile Exchange has surpassed OKEx as the largest Bitcoin futures provider. The regulated derivatives market at CME has doubled month after month as incoming interest has created more demand for CME's Bitcoin futures. The Chicago Mercantile Exchange, CME Group, is the world's largest financial derivatives exchange that trades in various asset classes. The exchange first launched its Bitcoin futures products back in December 2017, and since then the demand for crypto derivatives has skyrocketed. Wilshire Phoenix published a study which says that CME Bitcoin futures contribute more to price discovery than its related spot markets. CME Bitcoin futures have grown to become significant. This is not only demonstrated through trading volume and open interest, but also by influence on spot price formation. On October 24, 2020, news.bitcoin.com reported on how CME Group became the second largest derivatives market for Bitcoin futures. Two key events helped push CME's futures above the competitors: the crypto support announcement from PayPal, and the legal troubles surrounding the derivatives exchange BitMEX. This week, CME Group has surpassed OKEx and is the largest Bitcoin futures provider at the time of publication. The exchange has captured over $1.16 billion in open interest toward its Bitcoin futures market product. This is just a hair above the exchange OKEx, which commands $1.07 billion in Bitcoin futures. Arcane Research tweeted about the latest CME Group milestone. According to data from skew.com, CME is now the largest futures market for Bitcoin. Institutional investors are here. Other Bitcoin derivatives exchanges that are also seeing notable open interest spikes include Binance, Huobi, and Bybit. In fact, according to Arcane Research's recent tweet, Bybit and BitMEX share the same amount of open interest.
So that is pretty cool. Institutional investors are starting to take up this space. That is freaking awesome.
Following up, CME overtakes OKEx's largest Bitcoin futures market.
And we just kind of
Cointelegraph.com.
And we just kind of already talked about this, but let's go over a little bit more. I think there's just a couple key points within this article. Well, that did not play the audio. I'm just super curious real quick. What happened? What was the error? Time to wait, could not replace, blah, 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 blah. Oh, okay. Well, I'm going to have to read this one manually because he decided to break on me. But no doubt, CME overtakes OKEx as the largest Bitcoin futures market. Arcane Research announced that the CME had overtaken OKEx as the world's largest Bitcoin futures market, and institutional investors are here, Arcane said. CME in particular is becoming vital to Bitcoin price discovery, according to investment manager Wilshire Phoenix. So that one is that.
This one is China's BSN integrates Polkadot, Oasis, and Bityuan into its network. Posted by tokenhell.com. China's BSN integrates Polkadot, Oasis, and Bityuan into its network. Chinese leading blockchain infrastructure provider Blockchain Service Network, BSN, has added 3 more blockchain networks into its network. The cross-chain blockchain protocol Polkadot, the China-based public chain initiative Bityuan, and the privacy-enabled scalable blockchain network Oasis are the 3 protocols that have been integrated into the network of BSN. It is a significant development made by the BSN network by making these new additions, Executive Director of BSN Development Association Yifan He said in a statement. I am seeing commercial use cases built on the Bityuan framework are surging in China recently. I believe with this integration BSN will get developers around the world to be excited about building dApps that are enterprise-based and commercial-oriented. This integration with BSN will be beneficial for the developers of the Polkadot blockchain as they will be able to connect to its public chain. It will also prove beneficial for the developers of the other 2 blockchains Bityuan and Oasis as well. Bityuan serves as an innovative blockchain solutions provider for the companies of China. While on the other hand, developers usually utilize the platform of the Oasis network for developing scalable and private decentralized finance apps. While talking about the privacy features of the Oasis network, the director at the Oasis Foundation Yearn said that these privacy features may help in creating tokenized data, which is a new kind of digital asset which lets users stake their asset holdings and earn rewards for it. Moreover, tokenized data will let users control their data on their own. With the addition of these 3 new blockchain networks, the leading blockchain infrastructure provider of China is planning the expansion of its network portfolio further. Providing a centralized blockchain framework and bringing major blockchain networks in one place is the main mission of BSN. Prior to the addition of Polkadot, Oasis, and Bityuan, BSN has already added various top blockchain networks. At the beginning of the present year, it integrated the world's second-largest blockchain network Ethereum, the decentralized open-source blockchain network Tezos, the open-source blockchain platform Ozio, the open-source blockchain decentralized app platform Neo, and IrisNet. This move indicates that China is progressing well with its mission of becoming a leader in the digital transformation of the global economy.
So China is getting ramping up their presence in digital assets. So this is pretty good news for the Polkadot community. Within another aspect of good news, let us talk about...
Following up. Yearn Finance Dot has surged more than 900% in a week, cryptocurrency news. From themarketperiodical.com. Yearn Finance Dot has surged more than 900% in a week. Yearn Finance Dot, continuing the decentralized finance, DeFi Polkadot's legacy, has skyrocketed towards the top. Dot became one of the biggest gainers in the DeFi sector. Yearn Finance Dot, is a DeFi token version of Polkadot. Indeed, the crypto coin is a part of Yearn Finance Swap, YF Swap, a platform that desires to showcase DeFi farming to significant digital currencies. Last month YF Swap announced via a blog post that it intends to eliminate the support that has polluted the sector. However, to boost the price of Yearn Finance Dot, the team planned to erase 15% of the total token supply before next year. Indeed, the first 5% supply burning had already happened in the last quarter, and the second will occur by December. Dot have not surprised the sector by booming. As the DeFi sector has seen projects skyrocketing to extraordinary heights overnight, the soaring of Dot is nothing special for the industry. The most outstanding token among all DeFi tokens is Yearn Finance, which is rapidly booming in the sector to achieve an all-time high record since its launch. This year in August, it gained its all-time high, after which it continued without looking back. At writing time, it is trading at $23,612, which is around $4,500 above Bitcoin's price. According to several analysts, if it continued to hold above its 100-day simple moving average, then nothing could stop it from hitting the level of $34,500.
So that is pretty interesting. Yearn Finance is doing very, very well. Next up, let's talk a little bit about the Ethereum 2.0
Next
launch.
up we have Ethereum 2.0 Genesis Day Date Revealed, Tech Radar. Written by www.techradar.com. Ethereum 2.0 Genesis Day Date Revealed. The launch of Ethereum 2.0 is set to take place on December 1st after all, following concerns that the staking threshold required to set up the Beacon chain, an interim blockchain that will operate alongside the current network, would not be met. Just over a week ago, it seemed unlikely that the threshold would be met with the Ethereum 2.0 staking deadline looming. The threshold meant that 16,384 validators needed to stake a minimum of 32 Ether, the cryptocurrency underpinning the network, equivalent to around $14,800 at current market rates. However, on November 24th, Ethereum 2.0 researcher Justin Drake tweeted that the genesis time for the Beacon chain launch had been set for December 1st at 12 o'clock UTC, confirming that the necessary Ether had been deposited. All of Ethereum 2.0's primary implementations have agreed upon the same precise code origins for the new blockchain. Although having a genesis date set in stone is only the first step on the way to launching Ethereum 2.0, it is an important hurdle to clear. I would say we are comfortably halfway through the overall effort to make Ethereum 2.0 feature complete, Drake told CoinDesk over direct message. The research, which lasted years, is largely done and the Phase 0 genesis is definitely a significant implementation milestone. Phase 0 lays the heavy-duty foundations, signatures, Merkleization, networking, ETH1 deposits, randomness, pose, etc. Many of the upcoming hard forks will lay a relatively thin infrastructure on top of these foundations. The process of rolling out Ethereum 2.0 is a long one and Drake does not expect the new cryptocurrency to formally launch until mid-2023. It could be worth the wait, however, bringing a number of improvements, particularly in terms of the number of transactions it can manage.
So now that we are in December 2nd, Phase 0 should have started for Ethereum 2.0, but we won't see the full thing until probably mid-2023, which that's okay. But we're slowly moving away from the old system, proof of work, which is in Bitcoin, and now we're moving over to proof of stake, which is the future for cryptocurrencies.
This one is: Seeming Oracle attack causes $100 million in Ethereum DeFi liquidations, Crypto Slate. From CryptoSlate.com. Seeming Oracle attack causes $100 million in Ethereum DeFi liquidations. Bitcoin, Ethereum, and the rest of the crypto market spiked dramatically lower on Wednesday evening as buying pressure finally abated. While it made sense that compounds sustained liquidations during the drop lower, things moved much faster on the platform than it did on Aave and MakerDAO, other DeFi protocols through which users can obtain loans. As noted by many on Twitter, what seemingly happened was that some natural market pressures pushed the price of DAI, USDC to 1.30 on Coinbase. Coinbase is often used as an exchange to watch by oracles due to the lack of manipulation, spoofing affiliated with the exchanges. This appears to be correct, but the liquidations were not natural. According to the DeFi loan scan, approximately $100 million worth of loans were liquidated on Compound in the past day. Analysts purport that it was a result of an oracle manipulation attack. In crypto, oracles are a technology that allows smart contracts to speak with data sources that aren't based on a blockchain. Compound appears to use its own oracle technology, which takes the prices of coins on centralized exchanges, then feeds it back into its own protocol to determine if liquidations need to be made, etc. It appears we just saw our latest DeFi exploit, attack, but this one was much different than all the rest. The running theory is that due to it being Thanksgiving, the buying pressure that had come from institutional pressures was temporarily taken offline. When the market began to drop, users began to notice that Ethereum transaction fees had begun to spike by approximately 1,000%. Liquidations, referencing how on-chain loans are regularly liquidated amid price crunches, were cited as the cause. Compound is a decentralized loaning platform where users can pool assets such as wrapped Bitcoin, Ethereum, and stablecoins and withdraw other coins as a loan. What are oracles? The most popular type of oracle is Chainlink, which is integrated into countless DeFi applications and blockchains. It's most often used to provide price feeds for DeFi platforms, such as with decentralized loan platforms, decentralized exchanges, etc. This technology was apparently exploited during the recent market drop. The exploit. Loan Scan reports that MakerDAO liquidated under $1 worth of collateral while DEX did $7 million. Compound's $100 million day clearly stands out. DAI trading at $1.30, at least in the mind of the oracle, meant that there were a number of users that took out loans in DAI were under the liquidation ratio. Their positions were subsequently liquidated to ensure that suppliers would not be underwater.
So this one went out of order. I've got to figure out how to get this a little bit better. Yeah. So while it was very hard to follow along via reading as he was reading, it's just very interesting that the what is this? Mining Oracle attack causes $100 million in Ethereum DeFi liquidations. That is crazy. Like, if you look at this chart here, it was, what is this, Bitcoin? So, I mean, I don't know if this is technically related, but whatever the case, BTC dropped 14% from its highs, while Etheth sustained heavy losses of 18%. I don't know if that's correlated or not, but yeah, moving on.
This one is gold price analysis. Saw USDC's firstly weekly close below $1,800 since mid-July. Posted by www.fxstreet.com. Gold price analysis. Saw USDC's firstly weekly close below $1,800 since mid-July. Gold lost 4.5% on the week, the worst week since end September. Stops got triggered after gold breached the $1,800 critical threshold. Coronavirus vaccine progress led economic optimism hammered gold. Gold, XOR/USD, finally breached the critical $1,800 support on Friday, closing the week below that level for the first time since July 16th. The spot eroded 4.5% of its value over the week, recording the biggest weekly decline since end September while extending the correction from record highs of $2,075 reached in August. The bearish sentiment undermining gold can be attributed to hopes for a swifter global economic recovery, thanks to the promising coronavirus vaccine results, which could likely bring life to normalcy in 2021. The Wall Street stocks rallied to record highs on potential quicker economic turnaround and weighed heavily on the non-yielding gold. The market optimism diminishes the odds of additional monetary and fiscal support. Gold, technical levels. Friday's sell-off to fresh 4-month lows of $1,775 was insured after the metal breached the $1,800 support line, the confluence of the psychological level and 200-day simple moving average, DMA. Stops got triggered below the latter, fueling a sharp $25 drop. The next downside target for the bears awaits at May 18th highs of $1,765 while the recovery could gain traction only on a sustained break above the $1,800 level.
So gold is not doing so hot, but it is relevant to this entire space. It is speculated that gold will soon have a reset in price, which will then boost it up significantly. Banks are buying more gold. So it is very interesting that the gold price had dropped, but based off of market cycles, based off of where we're at, there are various reasons as to why this is happening. Now, we'll get to that in later articles, but let's just quickly go over the fact that gold is getting close to seeing a significant rally. And so let's go ahead and talk about that one.
Next up we have Why Gold Prices Could Be Set for Another Rally. Written by finance.yahoo.com. Why gold prices could be set for another rally. This week hasn't been great for gold. The price of the yellow metal plunged then from $1,840 to $1,780. Actually, November was an awful month for gold prices, which dropped from a local peak of $1,941. It seems that the positive news of the vaccines eliminated the negative tail risk related to the pandemic. In consequence, the safe haven demand for gold declined. On the other hand, the price of Bitcoin has jumped recently as investors increased their risk appetites. Biden also started to announce nominations for top positions, which served to reduce the risk that a contested election had for uncertainty among investors. In particular, there are rumors that Biden is likely to tap former Fed Chief Janet Yellen to become the next Treasury Secretary. Investors know her and trust her, so they welcomed the possibility of her nomination for a key position in the new administration. Indeed, Yellen is well known and well respected, while having the knowledge and skills necessary for the position, although she has more experience in monetary policy than fiscal policy. Moreover, Yellen, who is seen as a dovish person, is believed to be supportive of bigger government economic aid in order to stimulate the economy and recover quickly from the coronavirus crisis. Actually, she has for some time been calling for increased government spending to help combat the recession and has always been concerned about the labor markets, low participation rates and high unemployment. As well as the former Fed chief, Yellen will closely cooperate with the U.S. Central Bank and will listen to the Fed's calls for a fiscal package. She will, therefore, help sustain high government expenditure to assure the labor market is recovering. Implications for gold. The divergence between equities and gold in their reaction to higher odds of more economic stimulus is bad news for the precious metals market. You see, the coronavirus crisis was very deep but short-lived, and the return to normalcy has to arrive earlier than it did after the Great Recession. However, I don't think that we will experience a replay of 2013 yet. The Fed will actively try to suppress the interest rates as long as it will not see inflation above 2%. However, the long-term fundamentals haven't significantly changed. The real interest rates actually remain deep below zero while the US dollar remains weak. In other words, the ongoing fiscal and monetary stimulus should support or even push gold prices higher in the medium to long run. It's possible that, when confronted with the lack of a fiscal package, the Fed will introduce some changes at its upcoming meeting in December to keep the real interest rates at ultra-low levels and to stimulate the economy.
So we're going to talk a little bit more about this gold stuff. As you can see, we are getting closer and closer to something significantly happening within the gold space. But there are factors that are in play that either make it so that the gold is not wanting to be the main facilitator of store of value, as well as there are indicators as to showing that why gold is going to be pushing forward ahead in the near future. So we're going to start taking a look at these.
Next up we have gold rises on soft dollar, stimulus bets as virus risks grow, Reuters. From Reuters.com. Gold rises on soft dollar, stimulus bets as virus risks grow. Gold gained on a softer dollar on Thursday, and as a mounting number of COVID-19 cases and their economic toll raised investor expectations of further fiscal and monetary support, spot gold was up 0.5% at $1,813.50 per ounce by 1,305 GMT. US gold futures were up 0.4% to $1,812.10. We've had a relatively soft dollar and it hasn't given that much of a lift to gold during the decline. Now it's giving a little bit of a tailwind, giving it a lift back towards $1,860, said independent analyst Ross Norman. Gold has found its floor and there's some evidence of good buying at these lower levels. The lower price has stimulated good physical buying in their Asian markets. U.S. Federal Reserve policymakers discussed how the central bank's asset purchases could be adjusted to provide more support for markets, according to the minutes of its November the 4th to the 5th meeting. Gold is considered a hedge against inflation likely to result from large stimulus. Persistently high numbers of new corona cases and extended lockdowns in many countries are increasing the need for further support in the form of monetary and fiscal policy. A vaccine will offer no quick fix in that sense, said Commerzbank analyst Carsten Fritsch in a note. New stimulus measures are therefore likely to be set in motion in the near future, which should benefit gold. In this environment, gold is initially likely to trend sideways in a corridor of between $1,800 and $1,850. Following up, gold price will see strongest boom in history after reset at this level. Harry Dent, Kitco News. Written by www.kitco.com. Gold price will see strongest boom in history after reset at this level. Harry Dent. Harry Dent, founder of HS Dent, is calling for gold to see its final rally to $2,200 announced next year before falling to multi-year lows. After 2022, the new lows should present a new buying opportunity. From 2022 on, I'd be buying gold hand in fist. It's going to hold up better than most commodities, he said. I'm expecting gold to go up. When this crisis starts to build next year, it's going to see more stimulus. It's going to go up at first. I have a target of $2,200, Dent said. $2,200 is the strong resistance in the coming months and then crash back down to its 2015 lows, around $1,000. The economy is not going to see inflation next year. On the contrary, major deflationary forces will push both stocks and gold down together, Dent said. When deflation sets in, like when Lehman Brothers hit in mid-2008, gold suddenly went down 33%, silver 50%. It was not the safe haven in the great financial crisis. It will not be the safe haven in this downturn either, because this downturn is going to see deflation. That's what's going to drive gold to $1,000, he said. Gold has a strong correlation to inflation and, importantly, inflation expectations. You will never see inflation for a long time. It will come back slowly in the next boom. You're not going to worry about inflation in a year or two from now. It's going to disappear, he said. Long term, gold will rebound as inflation returns. Long term, gold will definitely boom with the next commodity cycle. I think the next commodity cycle, overall, with gold being a leader in the precious metals, may be the strongest in history because emerging countries, which are going to be driving this next boom, Asia, Middle East and Africa, consume a lot more commodities as a percentage of their income than they do capital goods, he said. Once that happens, forecasts for $5,000 gold become possible, but gold will unlikely see such levels until at least 2038, Dent said. During the next 2 years, while gold deflates in value, high-quality bonds, like treasuries and AAA corporate bonds, are expected to outperform, Dent said. What I like, and what did well, during the 1930s depression, particularly the 1929 to 1932 crash, highest quality bonds, he said. I'm predicting in a crash, where stocks are going down 70% to 90% over the next 2 years, the 30-year, the longest duration US Treasury bond, which is only yielding about 1.5% right now, will go up 30% to 40% in value.
So that's very interesting for gold. If we look here, basically, maybe around, was it 2030 something? It would go probably around to $1,000, but it's still going to be testing its other highs that it needs to do. Now, traditionally, gold is great for a store of value, but now as we move on, people like me in the millennial group, we are looking at crypto to be that financial instrument. So it is very interesting to see that people are still looking at gold, and gold does have a significant value and could potentially reach all-time highs in the near future. But let's talk about a little on...
This one is growing momentum for increased scrutiny of hedge funds as US prepares for the Biden administration. From morningconsult.com. Growing momentum for increased scrutiny of hedge funds as US prepares for the Biden administration. A person with direct knowledge of the issue told Morning Consult that the Biden administration is open to more closely examining the role of hedge funds in the market mayhem and is considering regulation related to it. Though the person cautioned that addressing hedge funds may not be an immediate priority for the Biden administration, all of these developments point to heightened scrutiny of an industry that was largely treated with a light touch under President Donald Trump. In the aftermath of the Treasury's market meltdown in March, a number of influential financial observers and institutions pointed their fingers at hedge funds for their role in the pandemic-induced chaos. Among those who put hedge funds in the crosshairs were Janet Yellen, President-elect Joe Biden's pick for Treasury Secretary, and members of the Financial Stability Board, which released a report last week connecting vulnerabilities in non-banks to the Treasury's market turmoil. Hedge funds, unlike banks, are mostly regulated by the Commodity Futures Trading Commission and the Securities and Exchange Commission, but certain activities may cross into the territory of other agencies, meaning a more holistic approach would be important, he said. It's very easy to get into a game of whack-a-mole if you try to ban certain trades or regulate certain funds, Crane said. A Biden administration spokesperson did not respond to multiple requests for comment. The Federal Reserve, the Financial Stability Board and other policy officials independently examined the March market turmoil and concluded the evidence is weak that hedge fund activity was a primary driver of the sell-off. Michael Pedroni, Executive Vice President and Managing Director of the Managed Funds Association. In fact, the data show that some hedge funds continued to be actively engaged in the Treasury markets during this time, he said. The financial system remains vulnerable to another liquidity strain, as the underlying structures and mechanisms that gave rise to the turmoil are still in place. Randall Qualls, president of the FSB and the vice chair for supervision at the Federal Reserve, told reporters that it's clear we need to take action to address these issues. While the FSB report didn't find that hedge funds were the primary driver of the meltdown, it did note that the unwinding of what is known as a basis trade, often used by hedge funds, exacerbated the problem. During the March market dysfunction, the Federal Reserve stepped in, pledging to buy government bonds as a backstop to keep the markets running smoothly. Some policy watchers, such as Marcus Stanley of Americans for Financial Reform, equated this to a bailout for hedge funds, arguing that such actions make the case for the industry being one of the top priorities for financial regulation under a new administration. So while the likelihood of a split Congress nixes many legislative approaches to reining in hedge funds, Ian Katz, Director and Financial Policy Analyst at Capital Alpha Partners, said it's reasonable to expect hearings in the Democratic-controlled House over the next 2 years amid other signals that Washington is giving the issue more scrutiny. All this could eventually lead to some kind of limit on hedge fund leverage, said Stanley. Crane seconded the idea of limiting hedge fund leverage. I really do think regulators are going to have to think hard about putting some limits on leverage, including through margin and collateral requirements, he said.
And we are...
I'd be concerned if I was one of those hedge funds, he said. This is the second major bailout in about a decade for the financial industry.
And we are already seeing this. Regulation needs to happen for the crypto asset space. And we are seeing more and more happening with the leverage trading. I believe several exchanges like Coinbase has suspended leverage trading. It's just simply because there is quite a bit of risks involved, and we do need to see regulation in this space.
Next up we have Tudor Jones Bitcoin fractal hints at possible explosive BTC rally. Posted by Cointelegraph.com.
And it is sad that this thing broke again for this one. Why? Why'd you break? It's the same thing, the fucking duration. Okay, well, I will go ahead and read this one because the bot broke again. Paul Tudor Jones, Bitcoin fractal hints at a possible explosive BTC rally. A fractal from Paul Tudor Jones hints that Bitcoin price is at its early stage long-term rally like gold was in the 1970s. Based on the fractal, Bitcoin is in the early phase of a prolonged rally that could allow BTC to experience exponential growth in the longer term. Bitcoin may be on the same trajectory as gold. Bitcoin could follow the macro trend gold saw from the 1970s. First, BTC has a fixed supply that could not be expanded, which makes it an attractive hedge against inflation. BTC has the same qualities of a safe haven asset that gold has. In August 2020, the Winklevoss twins, billionaire investors behind the major U.S. cryptocurrency exchange Gemini, laid out the bull case as to why BTC price could rally up to $500,000. They identified the qualities of Bitcoin that make it a viable safe haven asset, specifically emphasized that BTC is not subject to any potential supply shocks unlike gold. They wrote, supply, Bitcoin is not just a scarce commodity, it is the only known commodity in the universe that has a deterministic and fixed supply. As a result, Bitcoin is not subject to any of the potential positive supply shocks that gold or any other commodity, for that matter, may face in the future. This comparison between BTC and gold is what leads many to believe that Bitcoin is on a trajectory for a long-term exponential growth. Su Zhu, the CEO of Three Arrows Capital, one of the largest funds in the crypto space, said any continued dump in BTC would be extremely bullish, as it would reveal that we are following the gold fractal from the 1970s, as per below by Paul Tudor Jones, the legendary macro investor who successfully used fractals to predict the 1980s stock market supercycle. There is also a massive gap between the valuation of Bitcoin and gold. Currently, gold's market cap is estimated to be $9 trillion. In comparison, Bitcoin's market cap is less than 4% of gold's valuation, which leaves a gap between the two assets. Investors say Bitcoin's origins give it strength. Tyler Winklevoss also noted that the anonymity of Bitcoin's creator is a major positive factor. He said, the fact that we don't know who Satoshi is yet, Bitcoin's market cap is at $330 billion, is a testament to the fact that Bitcoin speaks for itself. Until that day where Satoshi Nakamoto decides to make his face known, or we find out more as to who is Satoshi Nakamoto. My personal gut feeling is Satoshi Nakamoto is nothing but a CIA operative. But, that's just conspiracy, and it's fun to think that way. But we do not know what the truth is.
This one is: why institutions suddenly give a damn about Bitcoin. From Cointelegraph.com. Why institutions suddenly give a damn about Bitcoin. As big players continue to enter the crypto space, institutions are becoming mega hodlers. Without a doubt, Bitcoin, BTC, has become an increasingly popular asset to own among institutional investors. By the end of the second quarter of 2020, Fidelity reported in a survey of almost 800 institutional investors that 36% owned crypto assets. It also projected that 90% of institutional holders of crypto assets expect to invest even more in Bitcoin this coming year. From MicroStrategy and Grayscale to JP Morgan and Goldman Sachs, Bitcoin has solidified its place in investment portfolios as the asset to hold as a hedge against inflation and currency devaluation. However, beyond that, there are real technical reasons why institutional investors are becoming more and more bullish on Bitcoin, with some predicting it will reach $1 million by 2025. While the future value of Bitcoin may continue to be a topic of debate, the reality is that investors and financial institutions now believe holding BTC might prove to be less risky than not having Bitcoin exposure at all. More than 81,000 BTC belongs to the treasuries of publicly traded companies. Bitcoin acts as a non-sovereign currency that is uncorrelated with other asset classes. For institutional investors, it serves as a diversification tool to hedge against highly correlated markets such as the S&P 500, Nasdaq and the dollar. Two major areas where Bitcoin and blockchain technologies offer the most value to institutional investors include secure, borderless transactions and access to new opportunities that can't exist in traditional financial markets. With US dollar inflation on the horizon, notable investors like Ray Dalio and Paul Tudor Jones are also beginning to like Bitcoin more and more and have identified it as the best inflation hedge, comparing it to gold and copper. As banks and technology providers continue to invest heavily in research and development projects related to verifying and recording finance transactions, such as JP Morgan's new business blockchain and digital currency house Onyx, we will continue to see institutions increase their presence within the space. Custodians are used by financial institutions such as hedge funds and mutual funds, who are obliged to hold clients' assets with a professional custodian for regulatory purposes. Anchorage, a newly launched crypto custody firm backed by Andreessen Horowitz and a number of other prominent blockchain-focused venture capital firms, is one of those solutions. It was incorporated with the ethos to provide a crypto-native digital asset custodian for institutional investors. Bankrupt, a Liechtenstein-based private bank, has made it a priority to offer a range of blockchain banking services, including token launch support, crypto trading and digital asset custody. The regulated bank's services are targeted at professional market participants and financial intermediaries in Europe. Banks have also received the green light to custody crypto companies. Senior Deputy Controller and Senior Counsel of the U.S. Office of the Controller of the Currency Jonathan Gould wrote back in July, "We conclude a national bank may provide these cryptocurrency custody services on behalf of customers, including by holding the unique cryptographic keys associated with cryptocurrency. The adopted regulatory and custodian solutions provide security for institutional investors who may have otherwise been skeptical. They are also helping hold cryptocurrency exchanges to a higher standard, encouraging them to protect investors' money from theft or misappropriation. This has become an important catalyst for making digital assets more attractive to institutional investors and funds." According to a report from cryptocurrency derivatives platform Zubra, institutional investors are moving toward holding Bitcoin in physical form instead of cash-settled futures. The integration of institutional investors into the crypto ecosystem and their interest in holding is a positive sign for mainstream adoption. The similarities these investors share with holders indicate an easy transition from traditional finance to the digital economy, instilling trust in Bitcoin and representing an understanding and belief in the technology. Serving both parties is also the high potential upside that comes with decentralized finance, which has introduced a flow of new business streams, products and services. Services from the likes of Maker and Compound allow individuals to take out loans of any size in a matter of minutes without having to disclose their identity to a third party, while the yields associated with new DeFi products are resulting in gains that are higher than savings accounts, certificate of deposit accounts and other traditional options. The potential benefits of the DeFi revolution are just one more reason the dynamic of cryptocurrency is shifting into what believers have wanted all along, a digitized, borderless asset. The proof is in the numbers as institutional investors come for crypto. A recent survey by Fidelity Asset Management, 80% of surveyed institutions find investing in digital assets appealing, while the number of Bitcoin addresses has been steadily increasing. Addresses holding above 1,000 and 10,000 Bitcoins have also increased considerably. Coupled with declining balances on exchanges, this suggests that whales and larger investors are choosing to hold Bitcoin. A report by Big Four audit firm KPMG found that major banks, asset managers and qualified custodians are launching a new wave of institutional-grade crypto products and services. The institutional investments into cryptocurrency confirms trust in the digital asset from a significant place of power. The introduction of quality custody solutions.
So, that being said, institutions are getting into this space. and it is very important to see that with the advent of new things such as DeFi, decentralized finance, banking products are now being moved to the blockchain. As a result, these institutional investors need to adopt or they will be wiped out. So players like PayPal are now in the space, as well as many hedge fund companies are investing within these assets. So it is important to get in before the other major players start getting into this space. So it is very exciting to see that institutional investors are here for crypto and it's not going to change anytime soon.
Next up we have First Chinese commercial bank goes bankrupt. From www.ntd.com. China's Boshang Bank, or BSB, the largest local commercial bank in China, has entered bankruptcy proceedings. The top Chinese regulatory body, China Banking and Insurance Regulatory Commission, CBIRC, made the bankruptcy announcement on November 23. This made BSB China's first bankrupted commercial bank. On November 13, BSB announced officially that its $1 billion capital debt was permanently cancelled. Xiao was a white glove, or middleman, of the Zheng Qinghong family, the former top communist official of the country. White gloves is a metaphor that started in Taiwan, and quickly gained popularity in China. It refers to a middleman or outfit that launders dirty or corrupt money under a seemingly legitimate front. Corrupt officials deliberately keep some distance from their white gloves to give them room for deniability. The facilitators usually take care of the parents and children of the powerful and provide lucrative opportunities for their relatives to make easy money. The 48-year-old made international headlines in 2017 when he was kidnapped from a Hong Kong hotel by Chinese security officers. Xiao was sent back to China tied into a wheelchair with his head covered. Then he disappeared from public view. It is widely believed that he was abducted and taken to mainland China by the CCP. 3 years later, Beijing dismantled his flagship Tomorrow Group. Despite coming from a humble background, Xiao was able to control, in his 40s, a business empire with over 17 banks, 9 insurance companies, and multiple securities, trusts, and funds. The financial institutions controlled by Tomorrow Holdings have over $450 billion in assets. Officially, China's communist officials and their relatives are not allowed to do business. Thus Tomorrow Group became a vehicle to help the political elites make fortunes from the shadows, with the privilege of their power playing out behind the scenes. For example, in 2006, he helped the son of then top communist official Zheng Qinghong purchase a Chinese state-owned energy giant in Shandong Lunin. The company is worth around $10 billion. But Xiao paid only $500 million, 1/20 of the value.
So here we can see that Chinese banks are corrupt as fuck. We've known this with the FinCEN leaks, which then explains a lot of the banking institutions' corruption. But we also heard earlier this week between what's his name, Brad Garlinghouse and Pompiano on his podcast, and they had a very interesting conversation about whether or not China can overtake Bitcoin and other miners within the Chinese thing. And here we see speculation that this guy for this particular Chinese banking company was probably abducted by the Chinese Communist Party. And if that is true, then Bitcoin is under threat from the Chinese Communist Party. If they can do this to a banker, what do you think they're going to do to the miners? They want control, and so they will not stop until they get that control.
Following up. Rabobank, should we be thankful for this central bank support? Posted by Tyler Durden on Zero Hedge News.
And of course, this one also decided to break on me. Oh, wrong button. We're not opening up that. Let me see if it's the same error. Yes, it is the same freaking error. So I do know that I need to fix this up. Anyways, Rabobank, should we be thankful for this central bank support? First and foremost, the US economic data yesterday were not much to be thankful in some key areas. Initial claims in this particular spiked again to 778K, far worse than the 730K expected. Durable goods then surpassed the upside of 1.3%, rise, and then an upward revision to the previous month. That was followed by personal income, which has collapsed by negative 0.7%. I'm thinking that's million per month. I don't know what that means. While spending was up 0.5%, and then new home sales came in stronger than expected at 999K. The message they sent was that we are likely to see further changes to QE as soon as the mid-December meeting happens. So hopefully things don't go crazy. With QE, we are just printing money into infinity, although the Fed Reserve has mentioned that they have a inflation rate that they want to secure. I think it's like 3% inflation rate per year is their goal, but who knows what's actually going to happen, right? Out of the spotlight of the US media, which has so many stocks to look at in so little time, the Pennsylvania State Senate yesterday held a public hearing where Trump's legal team proceeded a flood of complaints of the election irregularities. That has only mentioned Hugo Chavez as a tangent. Michigan and Arizona legislatures will hold public hearings next week. A Nevada judge has allowed an evidentiary hearing on the 3rd of December. The partial recount in Wisconsin drags on. New court cases have been filed over the constitutionality of the voting process in several states. And recall, only after a state vote count is certified can its public file an actual election contest, which will now surely follow. In short, this is probably going to drag on into December and could likely end up in the Supreme Court. Yes, a Trump legal reversal is still a long shot, but his defeat is going to be polarizing than uniting. Equally, initially Biden proposed policy proposals been floating around. Blah 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 blah. I don't know if I want to finish the rest of this. Meanwhile, the rest of the world carries on as usual. That means that the further uncertainty on whether or not we stand in the Brexit process, even as a final deadline, after the final deadline continues to pass. The French are now accusing the British of foot dragging, and the EU and UK sides remain extremely far apart, apparently. Well, there is a lot of that about. These coming days will be decisive, says the EU's von der Leyen. However, how many times have we heard that one? Perhaps the Brits should try to synchronize with the US Supreme Court for maximum market attention. Within the EU, the standoff between Poland and Hungary and Slovenia over the rule of law element of the proposed Rubicon crossing of USD 2 trillion fiscal stimulus package also continues. I don't know what the rest of this freaking means, but essentially, should we be thankful for central bank support? That's the whole thing about this. And we're just going to go QE until infinity, which just means we're going to keep on printing. And other countries are very well in the mix of doing these same type of things, just simply because of the corona. So let's get to the main talking points of today.
Following up. Dark winter, millions of Americans are expected to lose their homes. Posted by Tyler Durden on Zero Hedge News.
And of course, this one broke again. So we have a dark winter that is heading upon us. Dark winter, millions of Americans are expected to lose their homes. A dark COVID winter is descending on the working poor of America as millions of adults face eviction or foreclosure in the next few months. Bloomberg, citing a survey that was conducted on November 9th by the U.S. Census Bureau, shows 5.8 million adults face eviction or foreclosure come January 1st. That accounts to 32% of 17.8 million adults currently behind on rent or mortgage payments. Uh, Hi, I'm one of those people. But as I said, I'm waiting on the crypto stuff. But that's the reason why I'm doing these videos, and I want to make sure that I provide as much value as I can because we're getting into a scary world. On December 31st, many of the key provisions in the CARES Act are set to expire if there is no action from Congress. This could be catastrophic for 12 million Americans who will lose access to their emergency unemployment benefits activated in the aftermath of the COVID pandemic, which alone could be a drag of 1.5% to growth in the first quarter, according to a recent Bank of America report. Additionally, the expiration of eviction moratorium, mortgage forbearance programs, and the suspension of student loan payments could compound the working poor's financial stress, many of whom, about 21 million of them, are unemployed and receiving benefits from the government. The survey points out at least half of households in Arkansas, Florida, and Nevada are not current on rent and mortgage payments, equating to 750,000 could face an eviction come early 2021. On a city-by-city basis, New York City, Houston, and Atlanta had the greatest threat of evictions coming early next year. So here's just a chart kind of showing what is going on with these particular cities. So I believe New York and Houston, Los Angeles, those are the highest areas that are going to be affected. And the most concerning part about the expiration of various CARES programs starting on January 1st is that it removes safety nets for the working poor. A lapse when expirations hit to Congress and the new Biden administration expected to strike a stimulus deal is expected to be short-lived. Yeah, pretty much. So why is this in our main talking points section? Well, essentially, I'm part of that group. I'm not doing very well, and so there is very high need to figure out how to get yourself back into a better system because things are going to get worse. In fact, the next article explains this.
This one is: the dollar is being systematically destroyed, and we're on a path that inevitably leads to hyperinflation. Written by Tyler Durden at Zero Hedge News.
And of course, the bot did not work for this article, so I'm going to have to read it again. The dollar is being systematically destroyed, and we're on a path that inevitably leads to hyperinflation. If we keep on treating the US dollar like it's toilet paper, it's just a matter of time before our entire financial system goes down the tubes. The US dollar is still the primary reserve currency. Because the rest of the globe uses the dollar to trade with one another, that creates a tremendous amount of artificial demand for our currency, and it keeps the value of our currency elevated at a level that is much higher than it otherwise would be. We are literally killing the golden goose. Most Americans do not understand what is happening. Just simply because I'm running out of time and I don't want to read the rest of this. We are just like here. This chart shows a lot. This is our dollar supply, and look at how it's just increasing. There's no drop, it's just always. And then we have a rampant increase between 2019 to 2020, and that is a significant jump. which means that inflation will be on the rise, or hyperinflation is what this article is talking about. Federal Reserve Bank President Charles Evans said the Chicago Federal Reserve Bank said Monday there is still quite a long ways to go for the U.S. recovery for the coronavirus crisis, adding that he expects the Fed to keep interest rates at their current near zero level until perhaps 2024. So it is very important that we get things under wrap, and that's why I do want to talk a lot about what is happening in the crypto space, because it will be one of the main vehicles to help people not be invested in traditional USD. And I hit this again. It's a good thing that one was not working.
This one is why you should focus on the process, not the win. From Shannon Haverty at Impact Theory.
I like this one. And of course, why is it that these later ones are not working? So essentially, here at ProductivePlace, we want to make sure that people have various tips, not just on the information of news that's going on in the crypto world, but they have various tips to help them in their process to become successful. One guy that I follow is Tom Bilyeu, who runs a company called Impact Theory. He also first originally created a sports nutrition bar called Quest. So the Quest bars are created by this particular guy. And if you don't follow him, I highly recommend following him, because Tom Bilyeu built a success food manufacturing business, sold his share, and then reinvested his money into a quick growing media platform called Impact Theory. He is one of the most relatable entrepreneurs I've ever followed, and as it seems though, he hasn't changed at all after post-exit. And as he said himself, he woke up rich, but he realized he had the same problems as the day before. So money does not change the factor of what your problems are. You're still going to have the same problems as you had the day before, with or without money. So it's very important to check this guy out, because he talks to a lot of different people, and it will give you a lot of various insight into these things. So one of the things that he knew was that he struggle was a guarantee and success was not. So you better love the path. And this is something that Angel and I have been trying to talk about on, is it money for passion or passion for money? He's on money for passion, and I'm on the side of passion for money. Without the passion, you cannot make the money. And if you're focusing only on the money, then you probably will never get to the project that you need to do, because there's always some sort of thing that's prohibiting you from getting to that path. Go back. There we go. So if you are focusing on the process and you're not if you're not focusing on the process and you're focusing on the win, then you're more likely to force something. Master athlete Lillard Hamilton put it best. A part of the way that you're able to make the right moves is not by trying to make the moves, but to let the moves happen. Rushing to the ending is not only puts your success in jeopardy, but also numbs your enjoyment of the process. It is easy to look at your journey as a checklist. In reality, there is no checklist. There is no gold medal as your life goes on as you reach your goals. The process is all you really got. Stop moving. You are going to shortchange whom you serve. Either you'll get sloppy at your work because you're prioritizing the money, or your customers will recognize that you are just in it for the money. They will recognize that you just don't really care about them. People will always be more perceptive than we think. The more that you enjoy the process, the more present and engaged you will be with whom you serve. In turn, they will be more supportive of you and your intentions. You aren't going to create inefficient systems. Many startups fail to grow, and really entrepreneurs fail to grow because they do not build systems that handle the growth. If you are focusing on getting something done, then you won't take the time to think about how you're doing it and strategically determine how you can handle it better next time. Jim Collins explained in his habits for years, if not decades, and found that his most efficient or most effective productivity formula is spend 50% of your time on new intellectually creative work, spend 30% of your time teaching or sharing knowledge, and then spend 20% of your time on necessary tasks. His effectiveness as a author, speaker, and coach are directly linked to him embracing and refining the process rather than pushing it through another day. By trying to bypass the struggle, you can easily skip over the ways to make your business even more successful. So, really try to focus on the process, enjoy what you're trying to build. I love doing the news, or I love listening to the news, I should say. And because of that, I need to figure out how do I take that passion and create something real out of it. So what I want to do is I want to take the news and then present it to you guys so that you guys can see it and hear my thoughts on it. So that is something that I do love. I love building automation tools, and that's helping me in this whole process. If the robot would have been able to read this, but you guys have been hearing the robots so far. I really enjoy automation and AI, machine learning, um, and this is the future. Because I enjoy these things, I'm going to take the time to put that into practice. And that's basically what this is saying, is that because we don't know what's going on with the future, I mean, if you want to build something for yourself, you got to figure out what kind of process you're going to love.
This one is 3 Reasons Not to Worry and How to Internalize Them. Posted by Michael Steinpsy.d on Psychology Today.
Well, super lame. I guess the bot is not working for the rest of these, huh? 3 reasons not to worry and how to internalize them. The behavior of worrying serves as an attempt to avoid unnecessary unnecessary uncertainty. Uncertainty triggers anxiety, and we attempt to run from the uncertainty by trying to solve it and get certainty in our heads. So you should return the spotlight on your attention onto whatever you're actually going to be doing in the present moment. For example, this guy recommends writing these down on an index card and then use them as quick reminders to yourself when you catch yourself worrying throughout the day. This can help you give yourself permission to cut off the worry process and come back to what you were doing in the present. So first off is worrying is not safe or necessary. One of the keys with all of these is going to be ask yourself, what does my experience tell me about this? How many times have the things you're worried about actually come true? So don't worry too much because it's probably just in your head. Worrying is not responsible. You do not owe it to yourself or anyone else to worry. But worrying doesn't actually do anything for anyone, and it just happens to go into your head or nowhere. It is something that you can do actually to blah 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 blah. No matter how much you are analyzing your worry question, you will not end up figuring out the answer. But again, back to our experience on, and ask yourself, has that ever happened? If you always end up feeling worse, not better than when you worry, ask yourself one question: what makes you think this time will be more different? As you can tell, I suck with reading, and that's the reason why I have this robot. But why worry, right? Why worry? Just continue doing the things that you're doing, and hopefully things will pan out.
This one is The neuroscience of feeling surprised by unpredictability. Posted by Christopher Bergland at Psychology Today.
Oh God. So I guess this bot really hates me now because it's just giving me the same freaking error and it's not reading these articles and I really don't want to read every fucking thing. So I'm gonna end this because and I'm gonna finish what's going on. But I do want to thank everybody for taking the time to watch this. This is Productive Place episode number 3 of the Productive Newscast. So yeah, hope you guys enjoy, and I'm gonna figure out these stupid bugs.